Good morning, Alex and friends. I'm Grace. Today is Friday, September 20th, 2024, and you're listening to Alex's News. The high in Riverside today will reach 77.8 degrees, with a low of 65.2, making for a pleasant autumn day. Coming up on Alex's News, we'll explore how voters are perceiving Harris and Trump's economic policies. We'll also delve into Lara's strategy to address California's insurance crisis. Plus, we'll examine the European Union's efforts to support Ukraine's reconstruction while the conflict continues. Stay tuned for these stories and more on Alex's News. We're turning now to the latest developments in the 2024 presidential race. Joining us is our political correspondent, Ethan, with insights on how voters are viewing the economic policies of the candidates. Ethan, what can you tell us?
Thanks, Grace. A recent poll has revealed some interesting findings about voters' perceptions of Kamala Harris and Donald Trump's economic policies. According to the Associated Press NORC Center for Public Affairs Research, voters are almost evenly split on which candidate they believe would handle the economy better.
That's intriguing, Ethan. Can you break down the numbers for us?
Certainly. The poll, conducted from September 12 to 16, 2024, among 1,771 registered voters, shows that about 4 in 10 voters believe Trump would do a better job on the economy, while a similar number think Harris would. Interestingly, about 1 in 10 voters don't trust either candidate, and another 1 in 10 have equal faith in both.
How does this compare to previous elections?
Well, Grace, this actually represents a significant shift. Historically, Trump has had an advantage when it comes to economic issues. But despite current low unemployment rates and stock market gains, voters remain concerned about inflation and its impact on living costs.
Speaking of issues, where does the economy rank among voters' concerns?
According to the poll, the economy is a top issue for about 8 in 10 voters, surpassing other key issues like healthcare and crime. It's clear that economic policies will play a crucial role in this election.
Can you give us an overview of the candidates' economic plans?
Of course, Harris is proposing more benefits for the middle class, funded by higher taxes on corporations and the wealthy. She aims to construct 3 million affordable rental properties, increase the federal minimum wage, and enact a nationwide prohibition on price gouging. She also plans to enhance the Earned Income Tax Credit and maintain the commitment not to raise taxes on households earning $400,000 or less annually.
How do economists predict these policies will affect the economy?
Well, Grace, according to economic projections, under Trump's policies, inflation is expected to rise to 3.5% in 2025, while under Harris's policies, it's projected to remain at 2.4%. Moody's Analytics suggests that under Trump's policies, the U.S. would have 3.1 million fewer jobs by the end of his term, with a higher unemployment rate compared to Harris.
Interesting. Are there any other issues where one candidate has an advantage over the other?
Yes, the poll indicates that Trump has an advantage over Harris on immigration, while Harris fares better on issues like gun policy, healthcare, abortion policy, and climate change.
How important do voters think this election is?
Very important, Grace. About 8 in 10 voters believe the presidential election will have a significant impact on the country's future, the economy, and democracy.
That's quite significant. Ethan, is there anything else we should keep in mind about these poll results?
Absolutely, Grace. It's crucial to remember that polls conducted this far in advance of an election have limitations in predicting the eventual outcome. Public opinion can shift significantly over time due to various factors, and the field of candidates may not be fully set. Even polls conducted closer to Election Day can have significant margins of error.
Thank you for that important context, Ethan. We appreciate your insights on this developing story. That's all for this segment, but stay tuned for more election coverage throughout the day. We turn now to a developing story in California's insurance sector. Insurance Commissioner Ricardo Lara has unveiled a new plan to address the state's homeowners insurance crisis. For more on this, we're joined by our reporter Chloe. Chloe, can you give us an overview of what's happening?
Certainly, Grace. California Insurance Commissioner Ricardo Lara has introduced a comprehensive strategy called the Sustainable Insurance Strategy. This plan aims to tackle the worsening homeowners insurance crisis in California, particularly in areas with high wildfire risk. The strategy focuses on increasing insurance availability, promoting competition, and ensuring that insurance rates reflect ongoing wildfire mitigation efforts.
That sounds like a complex issue. What are some of the key elements of Lara's plan?
There are several important components, Grace. First, insurance companies will be required to write more policies in high-risk areas that have been largely abandoned by traditional insurers. Second, insurers will be allowed to use catastrophe modeling for rate-making, but only if they commit to increasing policy writing in high-risk areas. Third, the plan offers 3 compliance options for insurers to meet new requirements.
Can you elaborate on those compliance options?
Of course, companies can meet the new requirements by writing 85% of their statewide market share in high-risk areas, achieving a one-time 5% growth in policies in high-risk areas, or reducing the number of policies in the California FAIR plan by 5%. The FAIR plan, by the way, is often referred to as the state's insurer of last resort.
I see. Are there any changes planned for the FAIR plan itself?
Yes, there are. The plan includes modernization of the FAIR plan by expanding coverage limits, improving financial stability, and increasing transparency. Additionally, Lara's strategy aims to address shortcomings of Proposition 103, which has led to a concentration of policies in lower-risk areas.
That's quite comprehensive. Are there any provisions to help homeowners directly?
Absolutely. Lara has proposed introducing state grants for low- and middle-income residents who invest in wildfire protection measures for their properties. This is intended to incentivize homeowners to take steps to reduce their wildfire risk.
Why does Lara believe this plan will work?
According to Lara, the plan will work for several reasons. It's designed to increase market participation and competition, potentially driving down premiums. It also encourages insurers to consider risk mitigation measures at property, community, and landscape levels when setting rates. Additionally, the creation of a public wildfire catastrophe model, in collaboration with Cal Poly Humboldt, is intended to serve as a benchmark to keep insurance rates fair and accurate.
Has there been any criticism of the plan?
Yes, there has. Consumer advocacy groups like Consumer Watchdog have voiced concerns. They argue that the plan favors the insurance industry and may lead to higher premiums without improving coverage. According to reporting from the Los Angeles Times, these groups contend that the regulations do not sufficiently require insurers to cover high-risk communities and allow insurers to include reinsurance costs in homeowner premiums.
That's interesting. Is there any uncertainty about the plan's effectiveness?
Definitely. The actual impact of catastrophe modeling on insurance affordability remains uncertain. While it could lead to more accurate pricing and potentially stabilize rates over time, initial implementation might result in higher rates as insurers adjust to new risk assessments. The long-term effectiveness of Lara's plan in making insurance more affordable and available will likely depend on various factors, including market competition, regulatory enforcement, and the accuracy of the catastrophe models used.
Thank you, Chloe, for that comprehensive report on California's insurance crisis and Commissioner Lara's new plan. We'll be sure to keep our viewers updated as this story develops.
You're welcome, Grace. We'll certainly be watching closely as the plan is implemented in the coming months.
Here are some other headlines. A tragic shooting occurred at the Letcher County Courthouse in Kentucky, resulting in the death of District Judge Kevin Mullins. Sheriff Sean M. Steens has been charged with first-degree murder in connection with the incident. The community is in shock, and the investigation is ongoing. Mexican President Ingeniera Copyright S. Manuel La Cubed Pez Obrador partially blamed the United States for the recent surge in cartel violence in Sinaloa. He cited U.S. policies and drug consumption as contributing factors to the ongoing security issues in the region. Sri Lanka is preparing for its first presidential election since the 2022 protests that ousted former President Gotabaya Rajapaksa. Many citizens are still waiting for significant changes and reforms in the country's political and economic systems. The 2024 WNBA season saw record-breaking performances from several players. Ajaja Wilson had an exceptional season, while rookies Caitlin Clark and Angel Reese made significant impacts in their debut year. Turkey has proposed regulating the popular Da paragraph mark NER kebab street food in Germany, sparking concerns about cultural identity and economic implications. The European Commission is reviewing the application, with Germany strongly opposing the move. We turn now to our third and final story of the morning. The European Union has made a significant pledge to support Ukraine's rebuilding efforts. For more on this, we're joined by our international correspondent, Ethan. Ethan, can you tell us about this latest development?
Certainly, Grace. The European Union has announced a substantial loan package of up to 35 billion euros, which is approximately $39 billion, to help Ukraine rebuild its economy and war-damaged power grid. This pledge is part of a larger $50 billion loan initiative that was agreed upon by the G7 nations back in June of this year.
That's a significant amount of money, Ethan. Who made this announcement, and what specific areas will this loan focus on?
According to reporting from the Boston Globe, European Commission President Ursula von der Leyen announced this commitment during a visit to Kyiv today. The loan is primarily designed to support Ukraine's national budget, enhancing its macro-financial stability. As for specific focus areas, a large portion of the funds will be used to repair and restore Ukraine's war-damaged energy infrastructure. The EU is also working on decentralizing Ukraine's power grid to make it less vulnerable to attacks.
I see. Can you elaborate on the current state of Ukraine's energy infrastructure?
Certainly, Grace. As ABC News has uncovered, Russian attacks have destroyed approximately half of Ukraine's energy infrastructure, leading to frequent electricity blackouts. The EU's goal is to help Ukraine restore and reconnect its electricity grid and boost heating capacity, which is crucial as winter approaches. In fact, the EU hopes to help supply around 25% of the 17 gigawatts of power Ukraine needs for the coming winter.
That's quite a challenge. How is the EU planning to fund this loan?
Well, Grace, this is where it gets interesting. According to the sources, the loan is to be underwritten by windfall profits from nearly $300 billion in Russian assets that have been frozen due to the invasion. Most of these assets are held in EU nations, with Belgium being a significant holder.
That sounds like it could be controversial. Are there any potential risks or challenges associated with this approach?
You're right, Grace. There are several potential risks and challenges. Russia is likely to contest the seizure of its assets in court, which could lead to prolonged legal battles. There are also economic risks, as the use of frozen assets as collateral could result in high borrowing costs for Ukraine. Additionally, Russia has warned of retaliatory measures if its assets are seized, which could harm Western investors with assets in Russia.
It seems like a complex situation. Is there anything else noteworthy about this support package?
Yes, Grace. In addition to the loan, the European Commission announced an extra 160 million euros, or about $180 million, to fortify Ukraine's energy network. Interestingly, 100 million euros of this is coming from windfall profits from frozen Russian assets. It's also worth noting that Denmark is involved in using these funds to purchase weapons and military equipment directly from Ukraine's defense industry.
Thank you, Ethan, for that comprehensive report. It's clear that this support package is crucial for Ukraine as it continues to face challenges and prepares for the upcoming winter.
That's right, Grace. The International Energy Agency warns that this winter could be the sternest test yet for Ukraine's energy system. The EU's assistance aims not only to help Ukraine survive the ongoing conflict with Russia, but also to encourage people to remain in the country, as approximately 4 million have fled since the war began.
Thank you again, Ethan, for bringing us up to speed on this important international development.
You're welcome, Grace.
And that concludes our news for this morning. As always, we'll keep you updated as these stories develop. Thank you for joining us. That's all we have for now. Today's episode was made by Alexander King with Claude Sonnet 3.5, the Perplexity API, and the Google Cloud Text-to-Speech API. I hope you have a great day. I'll see you tomorrow, Alex.